Hello everyone, today we're looking at the September 2023 accounting paper 2 for grade 12 that was written in the Eastern Cape province. So without further ado, let's get into the question. We are going to be looking at question 4, which deals with budgeting, and the question was allocated 35 marks in 30 minutes. We're given information below which says the partially completed projected income statement, or projected statement of comprehensive income rather, was prepared by the bookkeeper of Grandma Traders for the period 1 August 2023 to the 30th of September 2023. So it's really important to note the date. And then we have the business being owned by Prudence John. So the first question, we are required to list two items that would not appear on a cash budget. So two items that would not appear on a cash budget. The keyword here is cash. So something that would not appear in a cash budget is an item that is a non-cash. So if an item is non-cash, it means that there hasn't been, or there's not going to be any cash outflow or cash inflow, the likes of depreciation, trading stock surplus, or deficit. Those are the two most common examples. Another one would be bad debts, because with depreciation, you're not necessarily paying anyone and no one is paying you. You're just recognizing an expense for the utilization of your assets. So in that way, we are then going to record the two items here. We are going to say trading stock. We're going to say trading stock deficit or surplus. Then here you would then have depreciation, or some other options. You could say bad debts, but don't write more than the two that is required. Just write two. And then moving on to 4.2. 4.2 says calculate the missing amount denoted by Roman figure 1 to Roman figure 4 on the projected statement of comprehensive income. So that's 13 marks. This question has the most marks, and that is what you need to utilize on. Okay, so let us just quickly check what information we have, and the information extracted from the projected statement of comprehensive income for August and September 2023. So these are the things that we need to focus on. Roman figure 1, 2, 3, and okay, here's the fourth one. Right, so I like to do things in chronological order, so we'll just go with the first one and let us see what the information says. Okay, so information A, the business uses a markup percentage of 60% on cost. Stock is replaced in the month of sale. Okay, so we know that the markup on cost, right? First thing that we do, we know it's on cost. We know that our cost is 100, then selling price is 160%. Okay, right, that is key to note. And then now we have sales that are expected to increase by 10% per month. So that is our sales that we are budgeting for. And then C talks about manager salaries. The business employs a sales manager and an office manager. The office manager earns 300 more than the sales manager per month. The sales manager will receive a 5% increase effective from the 1st of September 2023. Then information D, delivery vehicle was purchased on the 1st of August 2023. Vehicles are depreciated at 15% per annum on cost. Then E, we are told that rent income will increase by 7.5% per annum commencing on the 1st of September 2023. Then F, we have the interest on loan that is charged at 14% per annum on the outstanding balance. Interest is then paid on the last day of each month and is not capitalized. The business intends paying 90,000 of the loan on the 1st of September 2023. So this is the information that we're supposed to consider when we are looking at our projected income statement. Right, so the first one, we are supposed to calculate the cost of sales that are budgeted for the month of September. Right, how do we do that? We know that we are given the markup on cost of sales, on cost rather, which is 60%, and we're given our sales of 246,400. And then if you have been watching, you probably know by now that we're supposed to say what we want over what we know multiplied by the amount. Then let us see what our cost of sales are. Let's just quickly calculate. It's 100 over 160 multiplied by 246,400, and then our cost of sales is 154,000. All right, let's just fill that in our answer book. Okay, so we have 100 over 160 multiplied by, supposed to be 246,400, which is 154,000. Right, so that is our answer for the first question, or the first Roman figure. And then we are going to look at the second one. So the second one requires us to calculate information that relates to the rent income. Okay, we read something about rent income on information E. So information E says rent income will increase by 7.5% per annum commencing on the 1st of September 2023. Okay, so here what we are calculating is the rent income, but look at which month. We are calculating the rent income for August, and here we're given the figure for September. So what we need to consider, we know that in September, on the 1st of September, it increased by 7%. So this means it is 100% plus the 7%, which gives the total of 107%. Then in August, it would have been 100%. So this is what we want. This is what we know. And then we're given the amount. So our calculation, let's go to our answer book. It would then be 16,340 multiplied by 100 over 107%. Okay, then let's just quickly get our answer, 107. All right, let's just make sure. Oh, it's 7.5%. Yes, so it's not 7%, so it's 107.5. Let's just fix that. So it's 107.5%. Okay, let's just make sure our calculation is correct. And then our answer would be 15,200. So the rent for August was 15,200. Okay, and then we simply move on to the third Roman figure, which talks about the salaries and the two managers, which we read about earlier. So Roman figure 3, we're calculating the budgeted amount for September. That's also key to know. And then we're going to the information and see what they say. So the business employs a sales manager. So we have a sales manager and an office manager. The office manager earns 300 more than the sales manager. Okay, so we know that whatever the sales manager earns, the office manager earns 300 more than that. And then the sales manager will receive a 5% increase effective from the 1st of September 2023. But we cannot apply this increase without knowing what the sales manager earns. So now let's go to this projected statement of comprehensive income. When we look at this amount from August before the 5% increase, we know that the difference between their salaries is only 300. So we are going to take the 18,700. Okay, let's come onto the answer sheet. So we're going to take the 18,700 and reduce it by 300 so that we can see how much they both earn. Right, so 18,700 divided minus 300, which is 18,400. So this is what they earn when their salaries are equal. So now we want to see how much does each manager earn if they earned an equal salary. So it's 18,400 divided by 2, which is 9,200. So this is what the sales manager earns, because the sales manager earns 300 less than the office manager. Okay, now let's go to the second part of this required. So it says the sales manager will receive a 5% increase effective from the 1st of September 2023. Okay, so we're going to take the 9,200 and multiply it by 105%, right? Then we add the 9,200 again because this is for the office manager. And we know that the office manager still earns the same salary, which is the 9,200 plus the 300 extra that they were earning more than the sales manager before. So this is for the sales manager. Okay, so we're going to say 9,200 times 105% plus 9,500, and then that gives us a total answer of 19,160. Right, so I hope that was clear. And then we move to Roman figure 4, which is most definitely the last one that we're supposed to calculate. So Roman figure 4, operating profit. We are given here the profit before interest expense, and we're given interest income. So we know that whatever amount we have here plus this amount will definitely give us this amount. So we need to work in reverse so that we can get the operating profit. In this case, we'll just say 59,940 minus 640, and then that will give 59,300 and I think it's fine. Let's just do that. Okay, my quick math is still working. Great. So it's 59,300. So we have our answer here as 59,300. So it was 59,940. Yes, minus 640. Let's just quickly ensure that the numbers are correct. Right. Great. So we are done with the second required, which is 4.2. We're done with 4.2, full 13 marks. Then we are going to move to 4.3, which says calculate the following. We are required to calculate the cost price of the new vehicle purchased on the 1st of August 2023. Then we are also supposed to calculate the savings on interest on loan after the loan repayment. Okay, so we are going to look at the vehicle here. All right, so the information about the vehicle is information D. So information D says a delivery vehicle was purchased on the 1st of August 2023, and vehicles are depreciated at 15% per annum on cost. All right, now let us see what we have on motor vehicles in this case. Okay, so we have depreciation. The only thing that we're given here is depreciation, which we can work with. We have depreciation, and you can see that for August we had depreciation budgeted at 12,000, but when we look at the actual amount, we had an amount of 14,875. An increase in our depreciation definitely means that we had an increase in the cost price of our vehicles. Okay, so now we need to either determine the difference between the previous cost prices, but we cannot necessarily do that because we're not given the cost prices. But you can do it with the depreciation rate, since we were given that it is 15% per annum. Okay, but remember, we are looking at months and not years. So whatever amount we calculate, we would then most definitely need to divide it by 12. Okay, so let's get on to the calculation. Now, we know that the difference between 12,000 and 14,000 would then be 2,875. Okay, then now that being the difference between the two, it simply means this is the depreciation for the new vehicle. Okay, so that's the depreciation for the new vehicle, but we know that this is the depreciation for 1 month only. Okay, and we cannot determine the cost price from depreciation of only 1 month. We need to determine the cost price from the full year depreciation. So the full year depreciation would then be 2,875 multiplied by 12. Okay, then let's see what that gives. So it's 2875 times 12, which is 34,500. But now we know that depreciation is 15% per annum on cost. So it means that this 34,500 is 15% of the cost. So this is 15% of the cost. So it's 15% of the cost of the vehicle. Now the cost of the vehicle would then be what we want, which is 100, over what we know, which is 0.15, which is 15%, multiplied by the amount of depreciation. And then let me just have the answer here. So it's 100 over 15 multiplied by 34,500. Then the cost price is 230,000. Okay, so the cost price is 230,000. So that's 5 marks. 230,000. So what we did, we took the 2,875 and we multiplied it by 12 to get, let's just see what that was, 34,500. Yes, so to get 34,500, then the 34,500 multiplied by 100, which is what we want, over what we know, then that will give us the 230. So remember, the 2875 is the difference between the depreciation amounts, and then we have our final answer there. You would need to show where you got the 2875 to obtain full marks. Then now we are told to calculate the savings on interest on loan after the loan repayment. Okay, so let's quickly go to the loan repayment information that we're given on information F. Information F says interest on loan is charged at 14% per annum. So that's per annum per year. All right. So one thing that will most likely catch you out is interest or just interest rates, which is what you need to be on the lookout for, because you're making the budget for a certain month, but the interest would be for the whole year. So you would definitely need to either multiply or divide by 12, depending on the scenario that you're given. So back to the information, it says interest on loan is calculated or is charged at 14% per annum on the outstanding balance. Interest is paid on the last day of each month and is not capitalized. So the business intends paying 90,000 of the loan on the 1st of September 2023. So when we are deciding to pay off a huge sum of money to pay off the loan, we are decreasing the liability of being charged more interest. So this is what we are told to calculate, because it says here calculate the savings on interest on loan. So when we are paying the money, we are reducing the risk, not necessarily a risk, but we're reducing the chances of being charged interest. Okay, so we know that we will repay back 90,000, okay, multiplied by 14%. So this would be the interest that we're saving for 90,000 divided not multiplied by 14%, which is 12,600. But remember that the 14% is per annum. Then we would need to determine the monthly, right? Because this would be for a month only. So we would say the 12,600 multiplied, not multiply, I'm confusing these two. So divided by 12 months. Okay. Then we get 1,050. So that is the saving that we have per month. Okay, let's just look at the information that we have. Alternatively, you could look at the interest on loan here. As you can see the differences between these two amounts, you could have simply subtracted the 5,250 from the 6,300. That would also give you 1,050. Let me just ensure that it would give the same answer, 5250. Yes. So you would just subtract the 5250 from 6,300, and that would be the saving on interest. Okay. Then let us then look at question 4.4, which says refer to the actual and budgeted figures for August 2023. So now we're just looking at August 2023, and we are supposed to comment on the control of the following items, and we're supposed to quote figures. So if you're not quoting figures, you are not getting any marks. Okay. So we're looking at the telephone, water, and electricity. Then we will also consider advertising. So the first thing, telephone, water, and electricity, we'll just go here onto our projected statement of comprehensive income. We have this. Okay, let's just highlight of telephone, water, and electricity. And you can see that this is our budgeted amount. Yes, 2,800. Then we have our actual amount of 4,480. First things first, you can see that this is most definitely over budget. We have overspent. Okay, so we need to calculate the difference that we have overspent by. Okay, so let's just go here. So it's 4,480 minus 2,800. Okay, so 4,480 minus 2,800, that is 1,680. Okay, so let's go here. So the expense was over budget or overspent by 1,680. Okay, because the actual, now you need to state where you got the difference. So the actual, all right, let's start with the budgeted first. So the budgeted figure was 2,800. Then actual figure is 4,480. Okay, my calculator is still showing the numbers. And then we have quoted figures. We have commented that the expense was over budget or overspent. Then remember that they said comment on the control. So we can see that the expense is poorly controlled, maintained. It's telephone, water, and electricity. They could be wasting water. The employees could be using the telephone to make their personal calls. That's why we might have the expense being at a higher amount. So most certain things could be happening, as I just mentioned. So let's just mention one thing about the control. So the expense is poorly controlled. Okay, and I think you could also mention there's wastage of resources, i.e. we could say employees using phone for personal calls. So just make sure that you don't yap, but you are fighting for the 3 marks. Okay, because most examiners are strict on comments, so you need to make sure that your comment is precise and straight to the point. So you just giving them an example to see that to show that you understand what you're talking about. So employees using phone for personal contacts. Okay, that's something you could think, and anything you can just come up with, and make sure that it does make sense and it links to the scenario. Okay, then advertising. We're going quickly to look at the advertising figures for August. We have, okay, right. So for August, we have advertising at 6,800. Then that is the budgeted. Then the actual is 7,375. But when you're advertising, what is the purpose of advertising? You want to make more sales. You want your business to reach more people. Then that is why advertising costs are always linked to sales income. We want to see if our sales actually increased or decreased when we apply advertising costs. Okay, so in this case, we can see that our actual sales are way above our budgeted sales, right? So it means that our advertising costs also increased and they increased sales, which means it's a positive thing. Even if we overspend on advertising, as long as our sales increase, then that is a positive thing. It means our advertising is working. So we need to quote those figures. Let's just quickly go here. So the first thing that we can see is that the expense was overspent by, okay, let's just look at the amount. So it's 7,375 minus 6,800. Let's just quickly calculate, and that's 575. Okay, so it was overspent by that amount. Okay, we've quoted figures. Then now we can state that, okay, this is not here. We can state that the advertising expense oopsie, okay, expense was effective because the sales of the company increased, not necessarily increased, but okay, let's just rephrase this. We could say this: the budgeted sales, or the actual sales. Though let's do this. The actual sales were above the budgeted sales by, okay, now we are going to look at our sales. Okay, so we're going to look at our sales. So the difference between 252 minus 224 was 28,000. So by 28,000, by 28,000, which is positive, right? Then we could either mention again that advertising increased sales, so advertising boosted the budgeted sales. Okay, and then we are going to look at the very last question, which is 4.5, I think. Yes, so 4.5 says a new competitor started operating from nearby premises in August 2023. Now, Prudence decided to decrease the markup percentage and offer more goods on credit. So, Prudence decreased the markup. So, decreasing the markup, we know that this will have an effect either on our cost of sales and our selling price, and most definitely our gross profit. Okay, so we are said to explain the effect of the decrease in markup percentage on gross profit, and we're supposed to quote figures. Okay, so let's just have a look at what happened here. So in August, the actual sales that we had was 252,000, and then we had cost of sales of 168,000. Let us just quickly calculate what our profit was. Okay, so we had 252 minus 168,000, and then that is 84,000. Okay, so in this case, she was able to maintain the same gross profit. The same gross profit was achieved, although she decreased her markup, but the sales were still the same. So she had more sales, but the cost of sales also did increase, but they increased due to her decreasing her markup. Okay, so we can state that her gross profit remained constant. Okay, so we had 252 minus, okay, that was 168 if I remember, which is, okay, let me just, oh, was 84,000. I was about to calculate again. Okay, so it's 84,000. Then Prudence was able to achieve the budgeted gross profit, okay, gross profit by making more sales, i.e. gross profit, or let's say actual gross profit, actual, I'll say GP is equal to actual, no, budgeted. Okay, this words are playing a trick around my mind. So this is budgeted gross profit. Okay, then 4.5, the last one says provide one disadvantage of selling more goods on credit. So we know credit, people are risky when you're dealing with people. Some people don't want to pay you back. So the first thing that always comes to my mind when we have a disadvantage of selling goods on credit is bad debts. Okay, so one other thing when you're selling on credit, let's say you're selling on credit and you want to purchase more stock, and then it would mean that you don't have any money, you don't have any cash to purchase any further stock, then it would have a bad or negative impact on your cash outflows or inflows, or let's just simply say cash flows, which will affect how you purchase stock and how you use your cash. So it would have a negative impact on cash flows. All right, so you're only required to give one disadvantage, which was worth 2 marks. All right, so that is the end of the question today. I hope that was really helpful, but do not forget to subscribe, comment, like, and share to your friends and other mates that need help with accounting. Other than that, I wish you all the best in your tests and exams. I'll see you in the next video. Cheers.